Hi friends, this is my fourth and the final video in the series of buy 4 mutual funds every single month. Thank you so much for your overwhelming response in all 3 videos so far, and this video is going to be a special video as well. Let me quickly give you a synopsis of the previous 3 videos, but please make sure you watch those videos after this video. So in part 1, I talked about 3 types of investors and 4 types of mutual funds. We also talked about the percentage allocation for each type of investor when it comes to these 4 types of mutual funds. In part 2 of the video, we talked about how to select the best flexi cap mutual funds. In part 3, we talked about mid cap mutual funds, and the revelation was that we need to go passive route when it comes to mid cap SIP investments. And today I'm going to talk about the small cap investments, which are extremely high return and extremely high risk type of mutual funds. One of my favorites. You're going to love this video. The very first question is, when it comes to small cap mutual funds SIP investment, should we consider active mutual fund route or should we go down to the passive mutual fund route? So for that, have a look at my screen. What you will see is that in the small cap schemes category, around 13 small cap schemes have managed to beat the benchmark returns in the 5 years horizon. There are total 24 schemes in that category. So this is point to point returns. And let me quickly show you those 13 small cap mutual funds that have managed to beat the benchmark index returns in the 5 years horizon. So if you have a look at my screen, you will see that there are a bunch of mutual funds here which have managed to beat the benchmark returns very comfortably, but these returns are only point to point. Let me now show you the SIP returns, because this mutual fund series is all about investing money every single month. So if you look at the SIP category returns, you will see that when it comes to small cap mutual fund category, out of 23 mutual funds on a 2 years SIP basis, 17 of them have managed to beat the benchmark index returns. On a 5 years SIP basis, 13 of them have managed to beat the benchmark index return. On a 10 years SIP basis, 9 of them have been able to beat the benchmark index return. And if you look at across the mutual fund categories, you will see that the small cap mutual fund category is the only category where maximum times active mutual funds have managed to beat the benchmark index return. So from a small cap mutual fund category, what we can clearly see is that we need to go down the route of active mutual funds. And the primary reason we are taking the active route here is not only the returns, but also please understand the universe of the small cap stocks is very large. It is between 250th stock to 500 stocks, meaning mutual fund managers' skill to pick the right stocks comes really handy. While in case of large cap mutual fund, you will only have to pick from 1 to 100. Here the universe of small cap mutual funds a bit larger. Therefore, we need to go to active mutual fund route. The first thing we are going to do is have a look at the past return. It is always important to check it out. So what you see on my screen is list of all the small cap mutual funds here, and also you will see that I have got the SIP returns in here. Let us firstly have a look at the 1 year SIP return. So if I sort this table out by 1 year SIP returns, you will see that the first top 3 mutual funds that have given the best returns when it comes to 1 year SIP return. Number 1 is Nippon India Small Cap Fund that has given roughly 22%. Quant Small Cap is number 2, which is given 22.34%, and number 3 is HDFC that has given 23.77% return. Now, if you look at the 2 years SIP returns, let us go ahead and sort this table out. We will see that HDFC is number 1, 31.94% return. Nippon is number 2, 31.67%, and Quant is number 3, which is 29.54%. So these 3 small cap mutual funds have given the best return from a 1 year perspective and 2 year perspective as well. Let us sort it out by 3 years and have a look at the data from a 3 years perspective. Quant has given the best return 67%. Nippon is number 2, 64%. HDFC is number 3, 61. So again, from 1 year, 2 year, 3 year perspective, these 3 mutual funds have been pretty consistent. What about 5 years? So let us have a look at the 5 year data as well. And from a 5 years perspective, Quant has given 167% return, which is by far the most returns, the highest returns. Nippon is number 2, 126%, and ICICI Pru is 107%. So HDFC from a 5 years perspective has slipped to number 5. But if you look at the difference between number 3, number 4 and number 5, we will see that the difference is not huge. So I think what we can establish from 5 years data perspective, that Nippon India, Quant Small Cap and HDFC has been the consistent performer when it comes to returns. Let me also look at the last 10 years SIP data. So from a last 10 years perspective, Nippon is number 1, Quant is number 3 actually, SBI is number 2, and HDFC is number 5. So I think all in all, what we can see is that Nippon, HDFC, and Quant has been the top 3 mutual funds when it comes to small cap SIP category returns. The next thing that I want you to have a look at my screen is Nifty Small Cap 250 Index, and what you will see here is that the growth rate from roughly 2005 onwards. The second chart that I want you to have a look at is Nifty 50, which is the top 50 stocks listed on Nifty 50, and you will see the chart here as well, and clear difference between the two charts you will see is that Nifty 50 is a growing chart with less volatility. If you see the Nifty Small Cap 250, you will see more volatility in the Nifty Small Cap space. In fact, if you look at from 2018 to 2020, the index fell by almost 50%. So small cap mutual funds are extremely volatile. And if you look at the Nifty 50 here for the same period between 2018 and 20, it was actually going up. If you also look at the bull run, so let us come back here and have a look at from 2020 onwards. Small cap has gone from roughly 3,000 level to almost 11,000 level. So almost it has gone up to like 4 times. While in case of Nifty 50, if you have a look at the bull run from 2020 to roughly 2023, you will see that it has gone almost from 7,500 levels to roughly 19,000 or 20,000 level, which is roughly 2.5 times. My point is simple. Small cap mutual funds can give you extremely high returns, but they can also crash like anything. And when that happens, novice investors or beginners are likely to quit the stock market thinking that, oh, all of a sudden my mutual fund portfolio is gone down by almost 50%. I'm losing money. I'm not investing any more money, and I'm just going to shut my demat account. Therefore, when it comes to small cap mutual funds, what we need to do is make a balanced portfolio. Let me show it to you how to do it. So if we have a look at the Nippon India Small Cap Mutual Fund and concentrate on those 2 years, 2018 and 2019, what we will see that in 2018, Nippon gave roughly minus 15% returns, and in 2019, it gave roughly minus 1.60%. Still better than the benchmark, but there were huge losses here. If you look at the HDFC Small Cap Mutual Fund, the maximum between these 2 years, the losses were around 8.48% in 2019. And if you look at the Quant in fact gave positive returns in 2018, but in 2019 it gave roughly 23.24% negative returns. So these 3 mutual funds are extremely volatile. I want you to now have a look at the Axis Small Cap Mutual Fund. Now this small cap mutual fund, what it has done is in 2019, it has given 20% positive returns while everyone else was giving negative returns. But in 2018, this also has given negative returns, which is 7.89%. It is the lowest when it compares to Nippon, HDFC and Quant as well. So my point is very simple. When it comes to small cap mutual funds, my simple suggestion is that we need to have a combination of mutual funds. We should not rely on one single mutual fund. Let us do a comparison of these 5 mutual funds. So if I bring my screen here, and from a risk perspective, one thing that I definitely need to call out is the beta. Have a look at the comparison of beta between Quant, Nippon, HDFC, SBI and Axis Small Cap Mutual Fund, and you will see that Quant, Nippon and HDFC have extremely high beta. Beta is simply that if the market drops by 1%, by how much percent these mutual funds will drop by, and you see Quant, Nippon and HDFC will drop by almost 0.90%, while Axis Small Cap Mutual Fund will only drop by 0.66%. So it is more stable small cap mutual fund, and SBI will also fall by relatively lower, which is 0.74%. So from a combination perspective, my approach has been that out of these 3 mutual funds, Quant, Nippon and HDFC, we should try to include 2 of them in our portfolio, and from SBI and Axis perspective, we should include 1 of them, so that our small cap mutual fund portfolio is more balanced. It is less risky, it is less volatile, it will give us a balanced mix of the mutual funds. Let me now give you some additional pointers that you can consider to make the final decision and select your own mutual funds. So the first thing that I want you to have a look at is the net asset or asset under management, and you will see that between Quant, Nippon and HDFC, Quant has the lowest AUM and then HDFC, and the highest AUM is by Nippon. Now when it comes to small cap mutual funds, please understand this concept very carefully, that lower the AUM, better it is. When I say lower, I don't mean extremely low AUM. What I mean is don't go for the highest AUM. And the reason for that is very simple. Let us say in the market, there's a very promising small cap stock and all 3 mutual funds want to invest in that. And let us say that all 3 mutual funds want to invest 5% of their assets in that particular stock. Now what is going to happen is 5% of 5,000 crore is going to be the lowest value when it comes to the AUM. And what it means is that quant is likely to buy that small cap stocks much easily, because the small cap stocks always have liquidity problem as compared to large cap stocks. So there may be chances where Nippon, because of its high AUM, may not be even able to buy 5% of the AUM in that particular small cap stock. So from that perspective, smaller AUM, small cap mutual funds are more agile in nature. Therefore, generally my preference is to pick that small cap mutual fund that has slightly lower AUM. So from that perspective, Quant and HDFC looks better to me. But again, this is not a recommendation, you decide. Also, if you look at the exit load perspective, all 5 of them have 1% exit load, except that Nippon will not have any exit load after 30 days. Remaining all of them will have 1 year of exit load. From an expense ratio perspective, if we compare, then Quant is the lowest from these 3, Quant, Nippon and HDFC. And HDFC is slightly on the higher side as compared to Nippon, but they are almost comparable. So from that perspective, you can pick any 2 mutual funds from Quant, Nippon and HDFC. Even if you want to select all 3, that's absolutely fine. All 3 are really good mutual funds. It is not a recommendation. I've just shown you the data and my preference. And when it comes to SBI and Axis mutual funds, as we can clearly see that Axis has slightly lower AUM as compared to SBI. So from that perspective, Axis is better. Also from an expense ratio perspective, Axis is only 0.55 among these 5 and SBI is 0.72. From that perspective also, I think Axis makes more sense. But again, I'm not giving you any recommendation. Please make your own decision. I have presented you a lot of facts and hope that helps you to make the right decision. You can also consider joining my YouTube member community, because I share in-depth exclusive content around stocks, mutual funds and so on. For example, yesterday only I talked about the difference between tracking error and tracking difference, extremely important for index investors. Secondly, there are a lot of scams going on my name. Please do not fall prey to them. I never send you a message through Telegram, Instagram, WhatsApp, email, etc. Please do not pay a single rupee to anybody pretending to be me. All my announcements are done through either YouTube videos or my community posts. I never reach out to any of you individually. I hope you found this video useful. I will see you in my next video. Until then, keep rocking.